On the cusp of passing another $1.9 trillion in COVID relief, the Biden administration has already signaled they want a bigger economic stimulus package after this one. When my mother told me that money doesn't grow on trees, she was clearly wrong. Is inflation on the way? Michael Burry, made famous by the book and movie The Big Short, thinks it is. All that and more in this month's Inflation Outlook. Let's get into it. For those of you who have watched several of my videos, it's no secret that I have some concerns about the rapid growth of our money supply over the last year. And I know a lot of you have concerns about it as well, or you probably wouldn't be watching this episode. What we try to do here is look at the hype, what is everyone talking about, and see if we can find any actual evidence of it, and think about how that could affect our lives. Today we'll do a quick rundown of the data from the last month, take a look at what Michael Burry had to say about the prospects of hyperinflation in the future, and if you stick around to the end of this video, we'll show you one of our new inflation metrics that's come out of our own research to help us get a better early warning signal on inflation before it shows up on everyone else's radar. Looking at the data this month, consumer prices remain timid as measured by the Consumer Price Index, growing by 1.4% year over year in January, but producer price growth did pick up a bit to 1.8%, which is due mostly to increases in the price of gasoline on the goods side, and on services, it's the portfolio management sector that drove prices up a bit. All in all, nothing too crazy happening on the domestic front according to these indices. As mentioned in last month's video, I'm trying to look at domestic and international prices separately because they can cause inflation in different ways, which I explained in the previous video if you want to know more about how. On the international front, we are seeing export and import prices continuing to trend higher, but nothing that is flashing big warning signs yet. The dollar continued its slide in January, which was a big driver of those increases, as well as the global economy, which is on the mend. Again, nothing too crazy happening in these prices at this time.
Once again, Mr. Papaya has put us all to sleep. Who cares about these average prices? We need to get more specific here. Check out this chart of the producer price index for watermelons. Looks pretty volatile, right? That's right. We can smooth it out with this moving average here, and it looks like we're down. Well, you know what they always say, turn a frown upside down and you got a smile. We're looking good now. So go ahead and give this video a thumbs and... What? I can't do that? Alright, fine. Turn it back around. Now I see opportunity. You know what they always say, buy on the dip. Watermelon prices aren't down, they're just more affordable. So stock up while you can, because I see a bright future for the watermelon market. And make sure and subscribe to the channel, hit the notification bell, and share it with everyone you know.
Now let's take a look at our financial indicators. While the dollar continued its downward trend in January, it's come up a bit in February and is now down 9% year over year. The stock market keeps powering forward as if we're in a bull market with a rip-roaring economy, and is up 20% year over year. While up a solid 8% over the same time period, gold has been generally trending lower over the last few months, which I believe is in large part due to Bitcoin getting more attention as a hedge against inflation, sucking the wind out of gold sales a bit. While silver has done just the opposite, getting a boost lately from some special attention from the Reddit subgroup Wall Street Bets. And I'm not even going to put where Bitcoin is anymore because, quite frankly, it just keeps screwing up my graph by completely going off the scale. Alright, we'll throw it in there anyways. It's up over 400% since last February. I have a series of videos on Bitcoin I've released since last month, so please check those out if you want to learn more about it. I'll put links in the description down below for those videos. This month, we're also going to take a look at the 10-year Treasury bond, as it's started to get a lot of attention lately. Bond yields have been trending higher since hitting a low of about 0.5% back in August. Some of that has been due to the rebound in the stock market. As money goes into stocks and out of bonds, bond prices move lower, which raises yields. But lately it's been getting more attention, and there are some speculating that the higher yields that we're seeing are starting to signal a belief in the market that higher inflation is on the way. Now, just to give you a bit of context, the current 1.5% rate we're seeing lately still pales in comparison to the 3% rate we were at before the pandemic, and is nothing compared to the more than 15% back in the 80s. So the uptick lately isn't a whole lot when you add in some context. Now, one person that some of you may have heard of, Michael Burry, definitely thinks inflation is on the way. And not just high inflation, he thinks hyperinflation is on the way. Michael Burry's claim to fame was correctly calling the collapse of the housing market and subsequent recession in 2008 and 2009. His actions were made famous in the book and movie called The Big Short, where he was played by actor Christian Bale. Burry sees a recovering economy, reopening from COVID restrictions, and large government stimulus packages leading to prices going higher. In that scenario, there would be a large supply of money that is chasing limited goods and services, which is a good recipe for inflation. And he's not alone. As I mentioned earlier, I have concerns of my own, and many others do too. It's basic economics that if you greatly increase the supply of something, in this case the US dollar, the value of it goes down. You can't just keep increasing the supply forever without this happening. So, if it's going to happen, the big question is when? How would we know? We're continually doing research to answer just that question, and tonight I'm going to share with you a product of that research. From our inflation outlook video back in December, we talked about why the inflation rate is so low right now. And this is the big reason. The velocity of money. This is a measure of basically how fast money is circulating through the economy. The faster that money changes hands, the more that we see inflation. Right now, it's near all-time lows. This graph here is produced by the Federal Reserve, and right now it's just calculated quarterly. This is because they use quarterly GDP data in their calculation of it. The most recent measure of the velocity of money is from the fourth quarter of 2020, which doesn't help us out much because we're already at the end of February 2021. What we need is something that's a bit more up to date. And that is why we have created a monthly measure of GDP combined with our GDP forecast that we update each month, and voila! We have a measure of the velocity of money that is more up to date and can give us a more timely sense of how fast money is circulating in the economy. We'll be including this in our inflation outlook video next month, so make sure you subscribe and turn on the notification bell so you'll know as soon as we release the next update. I hope this episode has been useful for some of you. If it has, please give it a thumbs up and drop us in the comment section below on where you think inflation is headed. If it wasn't useful for you, go ahead and give it a thumbs down and let us know in that comment section below that money does grow on trees. The Federal Reserve has proven it. And we're going to have to rethink what we're teaching our children. Either way, I'll see you in the next video.